Good afternoon, shareholders of Sembcorp Industries. Welcome and thank you for joining us today at the SIAS Sembcorp Industries virtual dialogue session. On 5th of September 2022, Sembcorp Industries announced that its wholly owned subsidiary Sembcorp Utilities has entered into a share purchase agreement to sell 100% of the shares of Sembcorp Energy India Limited to Tanveer Infrastructure Private Limited. SEIL is one of the largest independent power producers in India, operating two supercritical coal-fired plants totaling 2.6 gigawatt. The proposed sale is for a consideration of Indian rupees 117 billion, approximately Singapore dollars 2.1 billion, and will result in the deconsolidation of SEIL from Sembcorp, with Tanveer Infrastructure becoming the sole shareholder of SEIL on completion. Tanveer Infrastructure will settle the final consideration via a deferred payment note or DPN provided by Sembcorp Utilities. Today, we invited two senior management of Sembcorp Industries to join us at this dialogue. First and foremost, we have Mr. Wong Kim Yin, Group President and CEO of Sembcorp Industries. Second, we have Mr. Eugene Cheng, Group CFO of Sembcorp Industries. We'll kick off the session with a presentation by both Mr. Wong and Mr. Cheng to share some insights into the sale of SEIL to Tanveer, followed by a Q&A session. Please submit your questions through the Q&A function at the bottom of your Zoom screen, and the management will endeavor their best to answer all of them given the restriction of time. And with that, I'll hand over to both Mr. Wong and Mr. Cheng to do the presentation. Mr. Wong and Mr. Cheng, please.
Thank you, Mr. Loh. Good evening to all shareholders. And once again, thank you to SIAS for organizing this dialogue. In early September, we announced the proposed sale of our stake in Sembcorp Energy India Limited, or SEIL in short. Let me start by sharing with you the objectives of the transaction, following which Eugene will bring you through the rest of the presentation. In May 2021, we announced our strategic plan to transform our portfolio from brown to green. One of our 2025 targets was to reduce our greenhouse gas emissions intensity to 0.4 tons of carbon dioxide per megawatt hour, a 26% reduction from 2020 levels. We have said at that time that to achieve this target, we will explore strategic options for our India coal-fired power plants while managing the asset for value. The proposed sale of SEIL will enable us to accelerate the transformation of our portfolio from brown to green. We would have met our 2025 greenhouse gas emissions intensity target ahead of time, and renewables would comprise 51% of our group's energy capacity. The deconsolidation of SEIL will allow us to strengthen our balance sheet and concentrate our efforts on growing our sustainable solutions portfolio, which is a key focus of our 25 targets. At an implied value of 1 times price to book, this transaction will preserve value for our shareholders. There's no impairment, and EBITDA, net income, and NAV will all remain stable on a pro forma basis. SEIL owns 2 of the largest and the most efficient national grid-connected plants in India. Other than preserving value for Sembcorp's shareholders, we had to consider a broad range of other important stakeholders. And this includes SEIL's existing power distribution customers and end users, employees, lenders, as well as the wider Indian power system. This proposed sale is structured with the best interests of all the stakeholders in mind. And finally, we are pleased to have found a buyer who is also a trusted long-term partner. We are confident that under the leadership of the Tanweer Consortium, there will be continuity in SEIL's provision of essential, reliable energy services and ongoing initiatives to reduce greenhouse gas emissions intensity. In support of their commitment, we have included a financial incentive that rewards reduction in emissions intensity. Eugene will now bring you through an overview of the proposed transaction before taking you through the transaction rationale. Thank you.
Well, thank you, Kim Min. Now I will take you through the transaction overview. As you can see in this slide here, SCI, through its wholly owned subsidiary Sembcorp Utilities, is selling 100% of its shares in SEIL to the Tanweer Consortium. SEIL is one of the largest independent power producers in India, operating 2 supercritical coal-fired power plants totaling 2,640 megawatts. SEIL will be acquired by the Tanweer Consortium for a consideration of approximately 2.1 billion Singapore dollars. The Tanweer Consortium will be the sole shareholder of SEIL upon completion, and this will result in the deconsolidation of SEIL from SCI. The sale consideration will be settled via a deferred payment note provided by Sembcorp Utilities, the 100% owned subsidiary of SCI. Now, to continue the highest standards of reliability, operational efficiency, and best practices in the management of the asset, Sembcorp India Private Limited, a wholly owned subsidiary of Sembcorp Utilities, will enter into a technical services agreement with SEIL to provide supporting and advisory services. The existing operations team, who are highly experienced, will continue to be retained under the ownership of the Tanweer Consortium. Now, moving on to the next slide, and as mentioned by Kim Min earlier, the transformation of our portfolio from brown to green is underpinned by clear targets. And the sale of SEIL allows us to achieve the following on a pro forma basis. Now, it allows us to reduce SCI's greenhouse gas intensity from 0.51 tons of carbon dioxide equivalent per megawatt hour of generation in 2021 to 0.32. SCI would have achieved its target of reducing greenhouse gas emissions intensity to 0.4 tons of carbon dioxide equivalent per megawatt hour of generation by the year 2025 ahead of time. Our absolute greenhouse gas emissions will reduce from 26.2 million tons of carbon dioxide equivalent in 2021 to 10.4 million tons. And 51% of SCI's energy capacity will then be from renewables. Our share of net profit from the sustainable solutions segment on a pro forma basis for the first half of 2022 will then increase from 25% to 31%. We remain focused on achieving our 2025 targets and continued commitment to reduce absolute greenhouse gas emissions to 2.7 million tons of carbon dioxide equivalent by the year 2030 and deliver net zero emissions by the year 2050. Now, on a pro forma basis, SCI's gross debt as at 30th June 2022 will decrease from 8.7 billion to 7.1 billion due to the deconsolidation of SEIL in Sembcorp Group's balance sheet. Now, this will result in an improvement of the following pro forma leverage ratios. Our gross debt to EBITDA ratio will improve from 5 times to 4.9 times. Debt EBITDA to interest will increase from 4.5 times to 5.3 times. And gross debt to capitalization will decrease 66% from 66% to 62%. And shareholder value will be preserved through the sale. The base purchase price represents a price to book multiple of 1 times based on the unaudited financial statements of SEIL for the 6-month period ended June 30th of 2022. This is above the mean and median price to book multiples that are implied by precedent thermal coal power plant transactions in India in the past 5 years. And as laid out on this slide, our EBITDA, net income, and net asset value would remain stable post the transaction. The deferred payment note, or DPN in short, bears interest at a rate per annum that is equal to 1.8% plus a benchmark rate equal to the Indian government 10-year bond yield spot rate. The interest rate includes a greenhouse gas emissions intensity reduction incentive rate, which will correspond to improvements in SIAL's emissions intensity. Now, as a result of the DPN, Sembcorp will recognize a DPN income, which is serviced by a portion of available distributions of the asset in SIAL. Assuming the transaction was completed on the 1st of January 2022, we will recognize a pre-tax DPN income of Sing$ 95 million and a pre-tax DPN income of Sing$ 79 million for the 6-month period ending 30th June 2022 on a pro forma basis, that is. And our net asset value or shareholders' equity will remain flat at Sing$ 4.2 billion. Now, this proposed sale takes into consideration a broad range of stakeholders and their respective interests. SEIL is one of the largest and most efficient national grid connected plants, servicing over 2.5 million households in India. In structuring the transaction, we took into consideration the requirements of multiple stakeholders. Now, for the power distribution customers and end users, there will be continued fulfillment of our contractual obligations. Employees will not be affected, and we do not lose the expertise of the existing operations team. There will be timely debt servicing for the lenders will continue, as the plant has long-term power purchase agreements secured and in place. And grid stability for the Indian power system will be maintained. These are two of the largest, most efficient national grid connected plants, which have strategic fuel flexibility due to its ability to access domestic as well as imported coal. Now, we are pleased to have found a long-term trusted and reliable strategic partner who will work with us to ensure a smooth transition of operations. The buyer, which is the Tanveer Consortium, is indirectly owned by Oman Investment Corporation's SOAC, or OIC for short, the Ministry of Defense Pension Fund of Oman, and Dar Investments. Now, OIC has been a trusted long-term partner of SCI with a strong track record of managing essential infrastructure and services. This includes the Salalah Independent Power and Water Plant, a 518 megawatt plant in Oman, founded in 2009 in partnership with us. The Tanveer Consortium is committed to continuing initiatives at SEIL to reduce greenhouse gas emissions intensity. And as highlighted earlier, Sembcorp will support its commitment via a greenhouse gas emissions intensity reduction rate factored in the DPN. Now, as this is considered a major transaction under SGX rules, it will be subject to the approval of shareholders, Sembcorp's shareholders. The extraordinary general meeting will be convened on the 8th of November 2022. That is the Tuesday of the following week. Now, the proposed sale is expected to close 6 months after the EGM, subject to the satisfaction of conditions precedents, including regulatory approvals. Now, this comes to the end of my presentation, and we will be happy to address any questions that you may have.
Thank you very much, Mr. Cheng and Mr. Wong, for your presentation and the details of the transaction. We have a question from the floor. First question from Mr. Brian Wong. Mr. Wong is asking the question on will the interest on the note, the DPN, will it be adjusted higher to take into account higher interest rates right now? Would either gentleman be able to answer this question from Mr. Brian Wong?
Yes, Mr. Loh. Thanks, Brian, for that question. Now, I think it is important to know how we have structured the interest rate for the note, right? We have structured it as a margin, which is a 180 basis points or 1.8%, plus the benchmark Indian government security, 10-year government securities. So which simply means at every single year, the interest rate will reset based on where the 10-year government, Indian rupee denominated government securities will be, which simply means that if the interest rate environment increases, that will be reflected in the 10-year government bond rate, and hence the interest rate for any given year will be adjusted for the rising rate environment. So with that feature in the note, we are of the view that the structure of the interest rate will take into account the rising interest rate environment.
Thank you for the answer, Mr. Cheng. We have a second question for Mr. Kiat Chia. I think it's a Mr. I guess this is probably a standard question for a deal like this. Why not an outright payment, outright sale? Why a deferred note? Would you like to elaborate on that?
Allow me to attempt that. Now, coal assets these days cannot attract financing. You can talk to banks from any Western country, so Europe, US. You can talk to Japanese banks. You can talk to Middle East banks. You can talk to Chinese banks, Singaporean banks included. They would not finance a coal deal. So if we want to sell this asset for full cash consideration, we have to consider that our buyer will not have the benefit of financing. And because of that, the valuation or the price that we will get would also be significantly affected. Right, so you think about it, if we have to buy a house in Singapore and the bank tells you, I cannot lend you money, you have to come out with all equity, your own cash to buy the house, the amount of cash that you're prepared to pay will be lower, naturally, right? Mm-hmm. So, and this is reflected also in all the precedent transactions in the last few years. So all the deals that were done that is on a cash basis all took discounts of around 40, 50, 60%. So if we attempt to sell this asset, the buyer, not armed with financing, will then look at the precedent transactions and price our asset in the same way. So then if we are talking about a 40% discount, we are staring at a 900 million impairment.
And that's significant.
Yes, so that's why we say that by structuring the transaction this way, we are balancing our desire to transform our portfolio brown to green to decarbonize, while at the same time preserving value for our shareholders. And if I have to go a bit further, why are we confident with the deferred payment note? And why this timing? If you remember, and you shareholders remember, at the beginning of this year, we announced that we have entered into contracts, that underpin the long-term contracts that underpin the power sale from this plant. So with those contracts, almost the entire output, 85% or more of this business is now contracted. So this was at the beginning of this year. So with these contracts, we are very confident of the cash flow from this business in the next number of years, at least in the medium to long term. Then on the back of that, then now we are confident offering the deferred payment note as part of the purchase consideration. And in so doing, we preserve the value without having to take a big write down, while at the same time, we're able to decarbonize. So it's off. Hopefully, I'm just trying in my own way to connect these dots and to show you how this whole thing hangs together from the point of contracts to the point of deferred payment note, so that then we can help our buyer bridge this financing gap that is very prevalent out there today, and it's not about to change. And if anything, the financing gap is probably going to get worse with time.
There are a couple of follow-up questions from Mr. Kiat Chia, but before we go to Mr. Kiat Chia with the two follow-up questions on cash flow and also what's the risk of walking away from the deal, maybe we take a question from Mr. Tan Boon Leong in terms of the decarbonization process. What's the benefit of achieving carbon targets with regards to the shareholders? And what if we don't achieve the carbon targets? Maybe either Mr. Wong or Mr. Cheng can answer this question.
Yeah, so thanks, Mr. Loh, and thank you for that question from the audience. Now, I think first we have to take a step back to see what is the ESG world we are in today, right? The ESG world we are in today is such that, financiers as well as investors are concerned. Well, essentially, what's their concern? Their concern is having companies having a very carbon-heavy assets, right? And in order to, well, in their own ways, encourage decarbonization, they penalize companies on the basis of their cost of capital, which means, number one, for companies that are, laden with a carbon, banks may hold back financing or may extend financing at more expensive costs unless you are willing to set targets to decarbonize your portfolio, and then you may get a attractive rate of interest. And many of these express itself in sustainability-linked instruments. That is on the bank and the bond financing side of things. Now, in the equities financing world, many institutional investors, may be prevented from, investing in companies that, have, either a coal exposure or too much of a coal exposure, therefore, resulting in share prices not reflecting the fair value of companies and having, too high a cost of equity capital. So it's really down to cost of capital. So as a result of that, from Sembcorp's perspective, to ensure that for our shareholders that we are in a position where both from a bond and bank financing standpoint, we are able to get the best cost of capital, as well as from an equity financing standpoint, that the share price reflects a fair value, where we can allow the full breadth of investors to invest in our equities. This is would be important. Now, to illustrate that point more, categorically, for example, you will have noticed that since June last year, I've issued quite a significant amount of sustainability-linked bonds and financing. Right now, I was able to get anywhere from 10 to 25 basis point savings of our loan margins and bond spreads, which is significant against our straight bonds of bank financing curve. Now, in doing so, that is because I tagged a sustainable ability performance target, and that is my 0.4 tons of carbon dioxide emissions as my intensity target that I set for 2025. If I don't meet those targets, which one of the critical way in which to meet it is to come up with a mechanism or transaction that allows me to decarbonize the coal, then I will face anywhere from a 5 basis points to a 25 basis points step up in interest rates.
That's a cost to shareholders.
Yes, and that's a cost to shareholders. And then also, if I do not ultimately decarbonize and of coal from my portfolio, then many of the larger institutional funds will be prevented from investing in the shares, and then our market value of equity will not reflect its fair value, which is absolutely important for shareholders as well. So, which is why you can see that decarbonizing our portfolio in today's ESG world is absolutely critical to make sure that I have the right financing cost to drive growth in the renewables and sustainable solution side of things, and for our shareholders to make sure our equities reflect fair value of the company.
If I say it another way, simply said, you look at our shareholder register, maybe a quarter is made up of institutional investors, right? And another quarter is retail investors. So for the share price to go up, people need to buy my shares. And people don't sell my shares, right? If there's a lot of selling, share price will go down. If there's a lot of buying, share price will go up. And institutional investors increasingly are imposing constraints on their portfolio. If you own a coal business, if you own a carbon-intensive business, they will sell your shares. And if we are able to meet our carbon targets, we can attract new investors to buy our shares. And when that happens, share price will go up and our shareholders will be happy. So that's in another so-called a slightly different way of saying what Eugene just said, in terms of capital markets, operations, and so on. Then when he spoke about bonds and financing and debt, those are means to fund our growth. So we say that we are growing our renewables portfolio from 2,500 megawatts to 7,000 megawatts. To fund that growth, we need to borrow. And I mentioned to you just now in answer to an earlier question that banks are increasingly unwilling to lend to coal projects and to lend to companies with coal exposure. So if we do not decarbonize or do not divest our coal business, increasingly fewer and fewer banks will lend to us. Increasingly, even those who lend to us want to increase the interest rate. So our growth will be affected. Our ability to fund our growth will slow down. So less growth, again, less investors will like our shares, and again, lower the share price. So the short answer is actually, moving to decarbonize, we have seen proven in other markets, Europe and other places, that the shareholder base will start to react and reward people who decarbonize or punish those who don't.
So indeed, Mr. Wong and Mr. Cheng, the color money is green. So instead of waiting of 2025 to go down from 0.4, you achieve the target right now with the sale of SEIL.
Yes, the earlier the better.
Yes.
A little better. Thank you. There are two sets of questions that one is alluding to what if the deal doesn't happen for Mr. Mr. Kiet Chia and also Mr. Tiong In Yi. What if the deal doesn't happen? And the other one is also leading to default. If the deal happens, but there's a default on the DPN, what are the contingency plans by management with regards to these two scenarios? So maybe the first scenario, Mr. Wong and Mr. Cheng, what if the deal doesn't happen?
If the deal don't happen, it would be a setback, if you ask me, right? Because this is one of the better ways to immediately decarbonize, as I explained just now. So then we would have to find alternate ways, in my view, not as good ways, but slower ways to decarbonize, right? Now, if you have to apply technology to decarbonize, it's going to be costly and it's going to take a long time, right? So for instance, what technology? People have been talking about, potentially blending the fuel. Instead of coal, you blend it with something that is greener, a biofuel or something like that. Those things are going to cost more money and you will erode value, right? Because your every ton of fuel that you throw inside your boiler in a power plant is going to cost you more money. Your margins will reduce, the cash flow will be less, the profit will be less. So there are other ways to decarbonize, but it is, in our view, not as good as what we are proposing in this transaction, clean and fast and accelerate our decarbonization journey, right? So it will be a setback. Then we will have to find other ways we will not change the direction to decarbonize, but it will then have to be more costly ways and longer time. Yes. Yeah. Second question.
Yeah. So the
second question, default question. Yeah.
So I think I want to deal with the default questions in two ways. Like first, to say that do we have a protection against default, right? Mm-hmm. So I think if you look at how the DPN is structured, it does have a security, right? Number one, over the buyer's cash accounts in the event of the default. You also have a security over shares in the buyers. In the event of a default. So if there's an event of default, we do have securities over these things that will allow us to exercise over our security over them and preserve the value of the asset to us as shareholders. Now, the second question the second thing that I want to say is in relation on what would be my view in relation to the likelihood of default. right? Now, the thing is that, as Kim Min has pointed out earlier, the reason why we feel that we are comfortable in putting out the deferred payment note is because of a few things, right? Number one, the asset it's contracted, right? And it's very fortunate to have a high quality coal plant to be 85% contracted by a very stable cash flows over more than the next 10 years, right? These PPAs run anywhere from the 12 to 15 years, right? The weighted average length of these PPAs is over 10 years currently. So you have very fixed and stable cash flows over the next 10 years, allow it to very comfortably service its own debt at its levels, and with more than enough cash flows to come back up to the buyer to repay the note. So the contracted cash flows situation definitely give us confidence that the likelihood of a default is low. Now, the second thing to take note also is we would be supporting the new buyers with a transition service agreement, right? Which will allow us to also ensure that they are well supported with right advice, right technical expertise and advice to continue to run the plant efficiently and to meet all its necessary obligations, right? So in that situation, the conditions are really set for the plant to realize its cash flows and basically to be able to service the deferred payment note. So, two things to consider. Number one, the conditions are such that the likelihood of a default in our view, it's a low. And secondly, even if there's a default, we have the necessary securities over cash and also over assets to ensure we preserve the value of shareholders.
And the counterparty is someone that we know very well, right? They have been partners with us. The Oman Tanweer Consortium originates from Oman. And if you trace upstairs, ultimately it is the Oman government and royalty. This has been our partners that we've known for a long time. And at the same time, they also, given their pedigree, they have a reputation to also preserve themselves, right? And these are not fly-by-night counterparts. So I think that also is factors into the consideration heavily when we considering the risk of any default. Right, so you have a counterparty that has a reputation and is someone that we know very well and also has a pedigree. Yeah.
Thank you, Mr. Wong. Mr. Ching, I'll ask you a question about cash flow. How does a DPN affect cash flow situation? But while you're preparing for the answer to that, let me go to Mr. Wong. There's a question on decarbonization. So never going into third world countries, no more coal-fired plants. What is your renewable strategy, Mr. Wong?
Well, we have stated to the investor community, even in as early as May 2021, that we want to grow our renewables portfolio, right? So we started, when I came to this company in July 2020, we had about 2.4 gigawatts, 2,400 megawatts, right? And then in May 2021, we announced and we held an investor day, and we announced to everybody that, look, our target is to get to 10,000 megawatts of renewables in our portfolio, from 2,400 to 10,000, basically quadrupling it by the end of 2025, right? So we've been moving well in that direction, with the support of the full team and of course the board and the shareholders. We have been progressing quite well. So as of today, less than 2 years, 1.5 years into the journey, actually, from May 2021, we have gotten to 7,000 megawatts, 7.1 actually, and there's still some deals in the pipeline. So the idea is that, in short, we want to be a leading renewables company. We used to be, in the past, we were one of the leaders in Asia, independent producer of power. So we own gas-fired power stations, coal-fired power stations, right? So in a decarbonized world, we want to be a leader in leading renewable producer, right, among other things. So 10,000 is our target. We are well on the way to achieving it. And of course, our ambition, of course, will have to go beyond that, right? But I think at the right time, we will tell you how far we want to go. But suffice to say, I think our shareholders can look forward to this team being very committed to delivering a portfolio and a company that will be a leader in this space. Right? So we want to be a leading producer of green power. Right? From today, the portfolio is in wind and in solar, and it is in India, China, Southeast Asia, where we have our major presence. In the UK, we are having batteries, which is also an essential part of the renewables portfolio over there.
Thank you, Mr. Wong. I will follow up a question with you on come back to the basics of the deal. 2.1 billion Singapore dollars. Is this the best possible deal, and how you negotiated it? So while you're thinking of the answer, let me go back to Mr. Cheng. Mr. Cheng,
Yes.
cash flow.
Yes.
Any issue with cash flow?
Okay, I think from a cash flows perspective, with it being 85% contracted, right? We have never been more confident on the cash flow of this plant. Now, if you look at the performance of SEIL, historically before we have won the two long-term the 625 megawatt Andhra Pradesh PPA announced in January of this year, and the 200 megawatt Bangladesh export PPA. The plant was pretty much only about 50% contracted, and a lot of the power is sold on spot market in IEX in the past, and so cash flows was not stable, right? Now with these PPAs that are in place, 85% contracted, we are basically seeing a very strong EBITDAs of anywhere from 450 to 500 million Sing dollars a year coming out from the plant. Now, to give you a sense, if you look at our circular, right? If you look in the first half of 2022, you would see that SEIL did about 100 million of net income, right? So on an annualized basis, it's about 200 million of net income. So from an equity cash flows perspective, the plant has an annual depreciation of about 110 million. So that's about 310 million of equity cash flows that's available. Now, if you look at the cash flow waterfall that is disclosed in the circular, after the first year, almost 92% of the cash flows will be available to service the debt. 92% of that 310 million, right? And then, so that, it's a pretty strong annual available equity cash flows for the pay down of debt. Now, in addition to that, as we have also disclosed and discussed, in our previous, earnings announcement, one very positive step that has taken place in the Indian power market was basically the development of a kind of like a decree, if I may call it, from the central India government that obligates the distribution companies, which is our PPA counterparties, to pay off its past receivables. Now, for SEIL and the followers of Sembcorp will have known that, in the past, with the Andhra Pradesh as well as the Telangana discoms, we have amassed quite a bit of receivables, almost, close to 700 million. At the point of about June, right? Now, so what has happened is that both Telangana and the Andhra Pradesh discoms have essentially signed up to a equal monthly installment payment plan with us, where the Telangana discom, for their portion of the receivables, they will pay down, they're committed to pay down within the next 20 to 48 months. And the Andhra Pradesh discom are committed to pay it down in the next 12 months. So then there is a clear payment plan for the built-up receivables, and this will be additional cash that will be available to pay down the note. So the combination of the strong contracted cash flows that I talked about, and also the release of significant amount of receivables through the commitment of the discoms to pay down the past receivables in the said installments, then that gives a very strong set of cash flows in which we say that we are confident that the DPN will be a service and repaid within its lifetime, which is 15 years.
Thank you, Mr. Cheng. Back to you, Mr. Wong. Is it the best deal that we can negotiate for shareholders?
In my view, this is as good as it can get. Let me explain. Now, if you look at the value, right, this is at about $1.3 million per megawatt, right? We have a 2,640 megawatt power station. It's about $1.3 million per megawatt enterprise value. All the at one times book, right?
Yep.
The precedent transactions, that means the transactions that of coal power stations that were sold or bought in the last 5 years ranged between 0.2 to 0.6 times book.
So one time book is awesome.
It's supposed to be awesome. I mean, you just price on the numbers, and the equivalent price per megawatt is between 0.5 million to $1 million Sing dollars per megawatt. Okay, so our
And you got
1.3,
1.3.
our 1.3 is higher.
Yep.
Now, I want to also say that of course this plant is of good quality. That's why it should command a premium, right? Because it's a young plant. It ranks fourth in the entire 177 coal-fired power stations in India in terms of efficiency. It ranks number 4. So it is of course of a better quality as well, right? It's a young plant. We have managed it well, so that it does deserve a good valuation. But more importantly, as I mentioned just now, today, there's a good reason why all these power plant transactions in the last 5 years have all been done at a deep discount, principally because the capital markets are shifting away. They're not providing loans. You cannot borrow to acquire a coal plant, right? In other words, you won't find a buyer who can access financing to buy your coal business. And moving forward, the loans that is available to finance, let's say the working capital of a coal plant, will become more and more expensive. So the cost of owning this business, and then related to that, corresponding to that, the value of this business will reduce along the way. So the longer you hold it, chances are that given the ESG trend, the value of this business is just going to go down the longer you hold it, right? So this is not like real estate. You hang on to it, you pass it on to the children, it's going to be worth more. This thing is going to reduce in value the longer it goes out. And especially if the plant becomes older, becomes less efficient, especially when our contracts were to expire, right? So now that we are at the beginning of our contract that we have, that I mentioned just now, with 10, 15, 20, 10, 15-year contracts. These contracts is much better to try to divest them now. So that's on timing. Coming back, whether this is the best deal. So on the one hand, in terms of the valuation matrices I described, 1 times book versus 0.6 times. The other thing that maybe shareholders can draw from is also that this sale was reached after a competitive tender process, right? So there was competitive tender process that was conducted by HSBC, right? A reputable international financial advisor. So they obviously have their playbook and their best practices in running these processes. So there is some assurance in that sense. So it's not just hearing from me, it's not just looking at the number, but there's also a competitive process that conducted by a reputable international advisor, right? The last bit I would say is that we actually, without pounding our chest, we are very pleased with having been able to do this transaction and structure this transaction such that all the stakeholders are taken care of. So, generally when you sell or buy something, the new buyer comes in and says, I want to fire everybody, or I want to cut headcount, right? So in our case, all the management and the staff in the business is preserved, right? The other thing that can happen, somebody comes in and say, oh, I want to reduce my power output because I want to decarbonize, right? Then our customers will be unhappy, right? So in this case, we found a buyer and we have a structure that, allows them to continue running this plant, while at the same time also incentivizing them to decarbonize.
To GHG.
Yes. So if they improve their efficiency or improve their greenhouse gas emissions, we actually have an incentive embedded in our DPN motivate them to achieve that. So we coming back, so it is we feel that it is the best deal at the moment, at this time, because we have a competitive process, because we have achieved a valuation metrics that we can be happy with, because we have also looked after all the stakeholders, including our employees, including our customers, including our lenders who will have to give consent for this transaction to happen. Right. So I hope I answer your question in that way, not just from the right price, but there are many other considerations that are important. But principally to this, we feel that this is the best price that we can get at the moment.
Great answer, Mr. Wong. So Singapore, $2.1 billion, 1.1 time book value, 1.3 million per megawatt, HSBC independent tender process, great processes. And for the stakeholders, you got the greenhouse gas emission incentivization for Tanwil. So everybody wins in this opportunity for this deal. When do you expect the deal to close, Mr. Wong?
Well, there are some conditions to achieve. Like for instance, we need to get the shareholder support at our EGM, I think on the 8th of November, right? So I urge our shareholders to support the deal, right? So that's the first thing. Then among the other conditions to this, we also need to get the lenders' consent, the lenders to SEIL to consent to us changing ownership, right? So we are in the process of engaging the lenders to get their consent. Then we are also having to get the Indian Competition Commission to approve, right? We don't expect any problems with that because our new shareholder Tanwil Consortium doesn't own anything in India today, so there's no competition concerns. The last bit of the consent, we would need, of course, the consent of our customers, right? I told you about the contracts that we have entered into, so the contract counterparties would have to approve also to agree to this change in ownership. Now, again, we think that should be forthcoming, and we are engaging our customers mainly because we are the new owner is a reputable party, and we Sembcorp continues to have an interest in it, and we continue to provide technical support to the new owner. So unable to give you an exact date because it depends on when each one of these approvals are obtained. And the last one that we get, then we close. Yeah. So, but certainly we know that on 8th of November we need shareholder support. So please.
Thank you, Mr. Wong and Mr. Cheng. We have about 8 more minutes left to the session today. Great questions all around and great answers from Mr. Wong and Mr. Cheng. There's one more last question that we've yet to answer. The best in renewables, top 3, top 1. Mr. Wong, Mr. Cheng, maybe your views as to Sembcorp Industries. Where do you see yourself in terms of your position in renewables?
We were here to talk about the SEIL project, but these are my shareholders, so I try my very best to accommodate. Today in Singapore, we are number 1. All right. So in Singapore, we started only 5 years ago, and I'm personally very proud of the team to have been in 5 years got us to number 1 today at about 540 megawatts. We are number 1 in Singapore. It's not easy because Singapore, we do not have a lot of land. We don't have big farmland on top of which we can build solar farms, right? We are only doing rooftops on HDB flats, and we have to compete with the aircon units. We have to compete with rooftop farms and so on and so forth. So to have 500 megawatts in Singapore, the next closest competitor is in the low 400s, if I remember, right? So today already in Singapore, we're number 1. And I think in Southeast Asia, in terms of at 7.1 gigawatts today, we are within Southeast Asia, we probably are the largest renewable company already. Yeah. So, but our ambition is that if you look towards Europe and China, for instance, and the US, they have started earlier, right? They probably started 15 years ago in terms of growing into renewable space and so on. So the big players in Europe, China, and the Americas, they are in the 15 gigawatt range, 15, 20 gigawatt range. All right. So today we are 7, and we are probably the largest in Southeast Asia. And our ambition, if we reach 10, reach our target of 10, then we would like to think that we have earned ourselves a seat at the table. Now, if we want to be number 1, number 2, number 3 in Asia, we need to get to 20. Right. I'm not setting it as a target. I'm not disclosing that as a new target, but I'm trying my very best to answer my shareholders who are very dear to me. That's for us, at the end of the day, at 10 we'll be happy with, but I think we have the opportunity now, if we continue on this path, to be a leader in Asia, and to really rank ourselves among the highest in the world, in the top in the world. So Singapore, if you think about it, has never had a significant energy company. Even when Sembcorp was, when we were owning all the gas-fired power stations and all that, right? We're quite happy with our portfolio, and it's driven a lot of cash flows and profit for us over the years. But in the power generation, in the energy world, we were never among the leaders. But I think this season we have the opportunity, we have the team, we have the market growing at the right time, right? So we right timing, right industry, with renewables continue to be a very strong growth area where we operate: China, India, Southeast Asia. Right, timing wise, despite all the headwinds that we have in the macro, you're talking about rising interest rates, you're talking about potential recession in some of the markets next year, right? But these are short-term things that will come our way, and even rising interest rates, as long as we are not disadvantaged relative to our competitors, the market, the market for renewables continue to be there. So we're in the right industry, we're in the right time, we're in the right places, because Asia is at the gaining momentum in terms of renewables growth, and we feel like we have the right people, and this team has delivered so far, at least in the last 2 years, in terms of getting us from 2.5 gigawatts to 7.1. So if all these stars align, we are hopeful that we can build a business that will drive value for our shareholders, and be a business that our shareholders in Singapore can be proud of.
Thank you, Mr. Wong. We have about 3 more minutes left to our time. Maybe for both Mr. Cheng and Mr. Wong, one last remark. Christmas is around the corner. What will be your Christmas wish for shareholders of Sembcorp Industries?
Very good question. Thank you, Mr. Low, for giving me the opportunity. I think Christmas wish, of course, we hope that we would be able to close this deal by that time. I mean, we'll try our very best. And once we do that, and as I mentioned just now, we have some projects in the pipeline. We hope that we will continue to demonstrate our growth through action. And once we have decarbonized, taken this significant step in decarbonizing, we are hopeful that we would have new institutional investors who would be able then to include us into their portfolio, and they start buying our shares, right? And that would hopefully be a reward to our shareholders. That to us is the ultimate litmus test to our effort. So I want to take this opportunity to thank SIAS, right, and also to thank our shareholders. And I want to reassure shareholders that at the end of the day, we are very, very focused on driving value for shareholders. And what that means is that it will be reflected in the share price, it will be reflected in dividends, it will be reflected in underlying performance.
Thank you, Mr. Wong. And last words, but not least from you, Mr. Cheng, what's your Christmas wish for shareholders of Sembcorp Industries?
Well, thanks, Mr. Low. I think a lot of it have been said by Kim Yin, right? To get the support from shareholders next week, and for us to close off this transaction, which is a massive milestone for Sembcorp Industries, and I do believe that it'll go in a long way for driving value for shareholders. And also, of course, to look forward that as we come back after Christmas into the new year, and to have a positive news for shareholders. So, that's what I would hope to look forward for our shareholders.
Thank you, Mr. Cheng. And on behalf of SIAS, we'd like to thank you, Mr. Wong, President, Group CEO of Sembcorp Industries, and Mr. Cheng, Group CFO of Sembcorp Industries. Thank you very much for your presentation and your really, really good answers to the questions from the shareholders. Thank you very much, and thank you, shareholders, for attending.
Thank you, sir. Thank you, everyone.
Thank you, everyone.
Thank you, SIAS.
Thank you, SIAS.